Imagine a life where money works for you, instead of you working for money. Welcome to the world of passive income. In this scenario, your finances are not tied down to the traditional 9-to-5 grind. Instead, your income flows from various sources that require minimal to no effort on your part. It's like having a river that constantly replenishes itself. Now, there are numerous ways to generate this kind of income. You could write a best-selling book, rent out property, or even start a blog. But among these, one of the most accessible and reliable methods is investing in dividend-paying exchange-traded funds, or ETFs. Dividend ETFs are like golden geese, laying steady eggs of income for their investors. They offer the advantage of diversification, reducing the risk that comes with investing in individual stocks. Moreover, they allow you to tap into the profits of established companies without having to actively manage your investments. So, whether you're a seasoned investor or just starting out, dividend ETFs can be a significant boon in your journey towards financial freedom. One of the most accessible and reliable methods to earn passive income is through investing in dividend ETFs. So, let's dive into the world of dividend ETFs. So what exactly are dividend ETFs? Well, let's break it down. ETFs, or exchange-traded funds, are a type of investment fund and exchange-traded product traded on stock exchanges. ETFs hold assets such as stocks, bonds, or commodities, and they aim to keep trading close to their net asset value, although deviations can occasionally occur. Now let's talk about dividends. Dividends are a portion of a company's earnings distributed to shareholders, typically in the form of cash or additional shares. When you invest in a dividend-paying company, you're essentially getting a slice of their profits. So a dividend ETF is a collection of dividend-paying stocks. These ETFs invest in companies that distribute dividends regularly. What makes them a popular choice among investors, particularly those seeking passive income, is the potential for a steady stream of earnings. Rather than focusing on one or two stocks, a dividend ETF allows investors to spread their investment across a range of companies, offering a level of diversification. But that's not all. Dividend ETFs also offer the benefit of risk management. With a diversified portfolio, if one company underperforms or fails, it doesn't spell disaster for the entire investment. This risk management, coupled with the potential for regular income, makes dividend ETFs a solid choice for those seeking a more passive investment strategy. Moreover, dividend ETFs offer exposure to different sectors and industries, providing even more diversification. They can be a great way to gain exposure to the market's high-quality dividend-paying companies without having to pick and choose individual stocks. Finally, let's not forget the convenience factor. With dividend ETFs, the hard work of researching and selecting individual stocks that pay dividends is done for you. All you need to do is choose the right dividend ETF that aligns with your financial goals and risk tolerance. Now that you understand the concept of dividend ETFs, let's explore some of the best options available in Canada. The first on our list is the iShares S&P/TSX Composite High Dividend Index ETF, or XEI for short. A renowned choice among investors, XEI has carved out a niche for itself with its consistent performance and attractive yield. The ETF's portfolio mix is heavily skewed towards high dividend-yielding Canadian companies, which makes it a perfect fit for those seeking to tap into the potential of Canada's robust economic landscape. XEI's performance is a testament to the strength of its underlying assets. It's a parade of blue-chip companies that not only provide stability but also offer a steady stream of income. The yield, as you might expect, is an enticing feature of this ETF. It's often higher than many of its peers, making it a magnet for income-focused investors. The portfolio mix of XEI is its other standout feature. It's a carefully curated selection of Canadian companies that have a track record of high dividend yields. This domestic focus provides a level of familiarity and comfort for investors, and it also offers an opportunity for exposure to Canada's diverse economic sectors. XEI offers a solid performance with a focus on Canadian companies, making it an attractive choice for those seeking domestic exposure. But XEI is not the only player in the game. Let's look at some other high-performing dividend ETFs in Canada. First up, we have the iShares S&P/TSX Canadian Dividend Aristocrats Index ETF, or CDZ for short. This ETF specifically targets companies with a history of dividend growth, making it an attractive option for those who value consistency and long-term performance. CDZ's portfolio is a blend of different sectors, ensuring a healthy level of diversification. The yield tends to fluctuate, but it generally stays competitive, offering a solid return on investment. Next on the list is the Horizons Active Canadian Dividend ETF, known as HALE. Unlike many ETFs, HALE takes an active approach to portfolio management. The fund managers regularly adjust the portfolio's contents based on market conditions and trends. This active management can lead to higher potential returns, though it may also result in a slightly higher expense ratio. The yield is also attractive, making HALE a worthwhile consideration for income-focused investors. Moving on, we have the Vanguard Dividend Appreciation ETF, also referred to as VIG. This fund provides exposure to U.S. companies with a record of growing dividends. If you're looking to diversify your portfolio beyond Canadian borders, VIG could be a smart choice. It offers a solid yield and a robust portfolio mix of well-established companies. These companies are likely to weather market downturns and continue paying dividends, providing a steady income stream. Last but not least, the Vanguard High Dividend ETF, or VYM, deserves a mention. As the name suggests, this ETF targets high dividend yielding U.S. companies. It provides a higher yield than many other ETFs, making it particularly enticing for those seeking substantial passive income. The portfolio mix is diverse, spanning across various sectors and minimizing risk through diversification. These ETFs offer a variety of investment strategies and portfolio mixes, allowing you to choose the one that best fits your financial goals. Investing in dividend ETFs can open doors to a steady stream of passive income. It's that enticing prospect we've explored today. We've delved into the power of passive income and understood the role of dividend ETFs in creating it. We've also taken a deep dive into the iShares S&P/TSX Composite High Dividend Index ETF, commonly known as XEI, and explored other top dividend ETFs in Canada. Remember, these ETFs offer steady income from blue-chip assets, with varying focuses on Canadian and American companies. For instance, the CDZ emphasizes companies with a history of dividend growth, while HAL takes an active approach to portfolio management. And then we have the likes of VIG and VYM that provide exposure to U.S. companies with growing dividends. But as with any investment, it's crucial to do your own research and due diligence. Consider factors like yield, portfolio mix, and expense ratio before investing in dividend ETFs. And don't forget the importance of diversification. While ETFs can offer easier management and diversification compared to individual stocks, you might prefer stocks for potentially higher returns. Finally, let's not forget that dividend investing is recommended for its stability and income generation, especially during market downturns. But again, your individual circumstances, risk tolerance, and investment goals should guide your decisions. Before we wrap up, make sure to hit the like button if you found this video helpful and subscribe to our channel for more investing insights. Don't forget to check out our recommended videos for more information on passive income strategies. Remember, your best investment is in your knowledge. Happy investing.